We are jumping straight into Reddit today. Everyone is focused on the immediate price fluctuations, the volatility. But for long-term thinkers, the real story here is the structural shift.
Absolutely.
We're seeing this major change in its revenue mix, moving toward these high-margin AI data licensing deals.
And that's the key. That structural change is what's driving this new hyper-growth phase.
Exactly. And that's what we're going to unpack today, what this whole transition really means.
That's right. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
If you're enjoying the show, make sure to subscribe and hit the like button. It really helps the channel.
It does.
And definitely let us know in the comments which stock you want us to simplify next.
All right, let's start with the foundation. The bull case for Reddit.
Yeah, let's do it.
For long-term investors, it's pretty straightforward. You've got hyper-growth, and it's combined with meaningful operating leverage.
So profits are growing faster than revenue.
Exactly. Margin expansion is accelerating as they scale up, which, something you don't see with a lot of their peers. It signals this is a multi-year story, not just a one-off bump.
Okay, let's unpack those financials then, because they really are the cornerstone of this whole narrative.
They are.
Q3 2025 revenue jumped to what, $585 million? That's a massive 68% year-over-year growth.
A huge number. And advertising revenue specifically grew 74% year-over-year.
So what's driving that acceleration in advertising? Because that rate is just, it's blowing past a lot of its social media peers.
Well, it wasn't just one thing. It was several key factors really coming together.
Okay.
First, they're just getting better at monetization. The improvements in their ad tech stack have been huge.
Making it easier for advertisers to spend money.
Precisely. They've integrated new features, things like automated buying and optimization, which makes it easier for smaller advertisers to get on board and see a return.
And the second factor?
The second is they've had big success in monetizing their international user base.
Yeah.
Historically, that's lagged way behind the U.S. market.
Great.
So those two drivers are pushing up the average revenue per user, even before we get to the really exciting stuff with the data deals.
And you mentioned the earnings trajectory, because look, revenue growth is great, but profitable growth is the real goal here.
And that's what's so fascinating, the speed of the margin expansion. Q3 net income hit $163 million.
Wow.
We saw earnings per share come in at 0 to over 80 cents. The consensus estimate was, $62.60?
So a significant beat.
A huge beat. And more importantly, it wasn't an anomaly. We've seen a clear pattern of this across Q1, Q2, and Q3 of 2025.
So that consistency gives you confidence that the operating leverage, the ability to grow profits faster than costs, is real and it's sustainable.
That's the idea.
So if they're generating all this cash, what are they doing with it? They're not exactly a mature company ready for buybacks.
No, and they're acting rationally for a company at this stage. They're moving toward being free cash flow positive and keeping a very clean balance sheet.
Low debt.
Right, very low debt. Management is smartly prioritizing reinvesting that cash right back into their growth levers.
So things like AI, infrastructure, improving the ad stack.
Exactly, and accelerating that international expansion. At this point on their growth curve, maximizing the long-term market opportunity is way more important than returning capital.
Which is what the market wants to see from a growth company.
It is.
And all that reinvestment is aimed at reinforcing what many believe is their single most valuable asset, the data moat.
Yes.
This is the core differentiator, so we need to go beyond the buzzwords. What exactly makes Reddit's data so priceless for AI?
So let's break that down. Reddit's moat is its unique human-generated knowledge graph. We're talking about hundreds of thousands of active communities creating this really high-signal, context-rich content.
So, okay, why is their user-generated content better than, say, scraping X or Facebook? Isn't all user content basically the same?
Not at all.
Yeah.
Not even close. Think of it this way. Most social media content is ephemeral.
Yeah.
It's contextless. It's mostly shallow opinions.
Right.
Scraping the rest of the web is like grabbing a massive, unorganized pile of junk mail. Reddit, by contrast, is like a structured research library.
And here's where it gets really interesting for the generative AI model.
Exactly. The content is so valuable for training large language models because of its structure.
Okay.
Unlike generic web scrapes, Reddit's data is organized by community, it's sorted by topic, and this is crucial, it's validated by millions of users through the upvote and downvote systems.
The voting is the key, isn't it?
It is. It's what we call community moderation as ground truth validation. If a user asks, what's the best way to maintain a classic car engine? And a super technical answer gets thousands of upvotes in an expert community.
That tells the AI trainer that the answer is very likely to be accurate and relevant.
Precisely. That validated structure makes the data cleaner, higher quality, and much, much harder for competitors to replicate. No other platform at scale offers that.
And that data moat connects directly back to the margins we talked about earlier.
It's a perfect scenario for profitability. This high-margin data licensing revenue is what analysts call accretive to both gross and operating margins.
Okay, let's pause there. Define accretive for someone listening. What does that actually mean for the company's bottom line?
It means it just boosts the overall margin structure of the entire business.
Oh.
Well, Reddit already paid the cost to host that user content once for their own platform. When they license that same content to an AI company, let's say for a $60 million annual contract, the cost to deliver it is basically zero.
So it's almost pure profit.
It's monetizing an existing asset with negligible distribution costs. Since the cost is so low, it pulls the whole company's average profitability way up.
Driving faster earnings growth than if they just relied on advertising.
Exactly. This structural shift is what's fundamentally changing their whole long-term earnings model.
And then you have the network effects on top of that, the stickiness of the community itself.
Oh, that's powerful. Subreddits accumulate collective reputation, social capital.
Right.
If you've spent 5 years building your reputation in, say, the personal finance community, you're not just going to pick up and leave for some rival forum.
There's too much friction. It creates durability.
Absolutely. And that makes it highly attractive to advertisers who know they're reaching these super engaged, high-intent audiences.
So beyond the fundamentals, what are the market signals telling us? What's the immediate sentiment?
The immediate mood is net bullish. The technical signals are showing persistent demand, which confirms that momentum. Trading models are suggesting a strong risk-reward setup.
For investors are buying into the story.
They're clearly following the narrative that this transition from a pure ad platform to a diversified data asset is, highly valuable.
Okay, I have to inject some skepticism here. We're seeing massive growth rates. Some analysts have price targets as high as $300.
Right.
For someone new to this story, why isn't a price target like that just pure speculation? What's the valuation support?
That's a crucial question. The valuation support doesn't come from the ad business alone. It comes from applying infrastructure multiples, not social media multiples, to that data licensing segment.
Ah, so you value the two businesses separately.
You have to. If you forecast out that data revenue stream, which is high margin and predictable because of long-term contracts, analysts can justify those high price targets based on a sum of the parts valuation.
Got it. So you're buying a hybrid asset, an improving social media ad platform, and a critical AI data supplier.
That's the bull case. They believe the current price is at a meaningful discount to where it could go, assuming they execute.
Okay, let's pivot to the counter-arguments. What could derail this story? We see two main risks people are focused on. Let's start with the durability of those AI deals.
This is a really important question. The data revenue is central to the whole margin story, but how durable are these deals really?
Right. Is there a genuine risk that competitors, say Meta or someone else, could eventually offer up substitutable data sets and just drive the price down when these contracts are up for renewal?
That's the core risk. And it's why the unique structure of Reddit's data is so critical.
So what's the mitigation?
While rivals can scrape the internet, two things limit their ability to substitute. First, Reddit's content is explicitly licensed. That reduces legal risk for the AI companies.
Which is a huge deal right now.
A huge deal. And second, that community-vetted nature we talked about, that ground truth validation, is extremely difficult to replicate quickly.
You can't just build that overnight.
You can't. Analysts believe the contracts and the intrinsic value of the data will ensure that growth continues through 2028, which mitigates that immediate risk of, say, a pricing collapse.
So the barrier to entry isn't just scraping content, it's scraping validated content with clear usage rights.
Precisely. The cost and complexity of building that from scratch are just prohibitive.
Okay, the second big risk is more about perception. It's about insider selling. We saw headlines about the COO, Jennifer Wong, selling $9.18 million worth of stock.
Right, and that generated a lot of bearish chatter about leadership's confidence.
So what's the real story there?
This is a classic example of a headline creating noise that isn't really supported by the facts. You have to look at the context.
The sale was under a Rule 10b5-1 trading program. Can you break down what that means for our listeners?
Sure. A 10b5-1 plan is a prearranged trading plan. It lets insiders sell a specific amount of stock at a specific time. Crucially, The plan has to be set up when the insider doesn't have any material non-public information.
So this was planned months in advance.
Month in advance. It means the sale is for financial planning, diversification, buying a house, paying tuition, not because they suddenly know the next quarter is going to be a disaster.
So it's planned diversification, not opportunistic dumping.
Exactly. And the most compelling part is her retained ownership. The COO still holds over 1.18 million direct shares.
That is a massive position.
It's huge. It signals significant alignment with shareholders and confidence in the long-term story. This is a case where optics created a little bit of bearish noise, maybe an entry point for some.
All right, shifting gears, let's look forward. What's the next big event on the calendar?
The most immediate catalyst is the next earnings call. It's scheduled for February 11, 2026. They'll report Q4 2025 results.
And this one will be critical. Expectations are high.
Very high. The guidance for Q4 revenue is between $655 and $665 million. The market's looking for another beat and raise.
And they'll be looking specifically at that data revenue line.
That's right. They need to see that it's flowing strongly and that the ad product improvements are still yielding gains.
If they beat that guidance, what happens?
A beat, especially if it's paired with strong forward guidance for 2026, could really reinforce the whole bullish narrative and maybe start that re-rating of the stock toward those higher infrastructure multiples.
And we can't ignore the macro environment here, which is pretty supportive.
Not at all. The backdrop of potential rate cuts, a rotation towards profitable AI-levered platforms.
Yeah.
It's all positioning Reddit pretty favorably right now.
That's the lowdown on Reddit for today. The
Yeah.
core knowledge here is that this isn't just a simple social media story anymore. It's evolving into a critical, structured data asset for the age of generative AI. And it's backed by a clear multi-year earnings growth trajectory.
And ultimately, the question for you isn't about next quarter's ad revenue. It's about this. If the world's most powerful AI models increasingly rely on high-signal, human-vetted content,
Then what?
then how high does the intrinsic value of Reddit's irreplaceable knowledge graph actually go?
That's the question to think about. If you haven't already, subscribe so you don't miss our next breakdown. We'll catch you on the next one.